Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. Tensions in the Middle East are sending shockwaves through the global economy. Following U.S. and Israeli strikes on Iran, financial markets have reacted sharply, with the Korean won briefly weakening past the 1,500 mark against the dollar, its lowest level since the aftermath of the global financial crisis. And at the same time, international oil prices have surged amid fears of supply disruptions around the Strait of Hormuz, a critical route for global energy shipments. Policymakers are weighing emergency measures, including fuel tax cuts, strategic oil releases, and even potential price caps on petroleum products. As global uncertainty deepens, attention is also turning to Korea's trade strategy after the National Assembly passed a major investment law aimed at strengthening economic ties with the United States and easing tariff tensions. For a closer look into the economic situation, we connect to Shin Se-don, professor of economics at Sookmyung Women's University. A big welcome, Professor.
Good evening.
And also joining us is Hwa-Kyun Kim, professor of banking and finance at Texas A&M University's Mays Business School. Good to see you, Professor.
Good to see you, and thank you.
So first, let's start off with Professor Kim, with the market reaction first. Following the U.S. and Israel's strikes on Iran, the $1 exchange rate briefly surged past 1,500 won, which I said is a level not seen in the aftermath of the global financial crisis. Professor Kim, what does this sharp movement in the currency market tell us about how investors are assessing the risk right now?
Right. So I think the last time the Korean won per dollar surpassing the 1,500 won was in 2008 global financial crisis. So including also 1997, I think the Asian crisis, this 1,500 won seemed to work as some form of psychological barrier to investors, both domestic and foreign investors. So the signal-wise, looks like the global investors are heading into more like a flight to safety mode. And when we saw the U.S. and Israel striking Iran, the immediate market reflex was to dump like all the risky assets, like including U.S. market itself, of course. And also the shifting from weaker currencies in favor of the safer haven currencies, including dollars and yens and Swiss franc and things like that. So clearly it has a lot to do with, in this case, energy supply. And as we can see now that the G7 countries are talking about using oil reserves, and also the President Trump's remark that the end is not like the war is not like, that near the end, that kind of things actually push the energy price down, and also the stock market restored. So clearly a lot of volatility, meaning the investors are assessing, but at the same time, uncertainty is highly affecting the whole market. And also, I think to Korea, given this system of the export-driven economy, this type of things is going to be very big because obviously, the oil is a raw material that is used for most of the productions, etc. So I think clearly it's going to have negative impact, and the investors are assessing this as one of the major risks. Having said that, I think if we compare this to 2008 cases, if you remembered, the exchange rate actually jumped from about like 951 to 1,501 within a month. So I think the gap and also the speed was like really high. On the other hand, as of now, I think it was already around like 1,400 to 1,450. Even with the various intervention from the Bank of Korea and the government's, the messages. And then I think it moved by another 51 or something. So I think percentage-wise, and also in terms of speed, it's much weaker, I think, in terms of the effect. So I think we already have lots of other risks. So that's probably why the currency is relatively in weak position. And then I think this energy price and also the regional conflicts in the Middle East, I think affects additionally about like 20% or something. So clearly it's not a great situation, but it's not as bad as in 2008-9 situation, I believe.
It's a little bit better than back then, but still the level of risks are quite high. Now, beyond the exchange rate, there are also concerns about a broader financial market volatility as geopolitical tensions rise, of course. So, from a financial stability perspective, Professor Shin, how concerned do you think we should be about turbulence in the currency and financial markets?
Well, if we talk about the exchange rate, for the last 1 year, 12-month period, the volatility of Korean currency is almost like the volatility of Japanese yen. It moved in tandem for the last 1 year, 12 months. And if you look at 2 year period from 2024 until the end of 2025, it also moved almost 95% together. So to me, Korean currency, gyration for the last couple of days, it's just a short-term period. And if you look at it a little longer, Korean currency is not more vulnerable compared to Japanese yen. So I think Korean currency vulnerability is overblown in some sense. But the Korean stock price has been rising almost 100% for the last, I think, a year from initiation of the administration. So there is a vulnerability of Korean stock market, which has been, risen almost 100%. So everybody was talking about, Kospi has been overblown. So we were waiting in some sense, when the Kospi will drop precipitously. And at the time, there was an Iranian war. So I think for the last, 2 weeks, the Kospi has been dropping more than 10%. And that, I think, is going to cause a significant, problem for the generation 2030 who has borrowed trillions of dollars, trillions of won into Kospi market. So I think it is not Korean currency, which has been pretty stable compared to other currency. I think the stock market is pretty, vulnerable when, the war continues for a couple more weeks. So to me, I think the stock market is something that we have to be careful about.
So we could be more concerned about the volatility in the stock market right now. Then the financial sector is quite stepping in right now with this situation. Banks and financial groups have begun offering emergency financing and liquidity support for exporters and small businesses as well. Professor Kim, how important do you think is the role of financial sector in preventing market instability from spreading into the broader economy?
I think this proactive intervention is a pretty good move, and also it's a necessary move. If we learn from history, I think, including the Great Depression and many of these, whether it's a financial crisis or like just a more real sector-led recessions, if the big turmoil, especially during the short-term type of the situation, it is important for financial sectors provide liquidity to firms, especially the smaller firms, because they are more obviously subject to any kind of cash crunch and the constraints related to financing part. The modern firm activities are not very are very different compared to the old days, in that like every day all this kind of their operation activities are tied to the financial activities, because virtually all of these money transactions are happening through financial the institutions. Therefore, if some part of it is going to be hamstrung, then I think that's going to have a big issue, I think, in terms of daily operations. So meaning supply chain side is like completely tied and connected to the financial side. So given that, I think that stepping in with this type of emergency financing and the liquidity supports, I think banks are acting very wisely, and also as a good vital firewall. So I think definitely it can prevent possible contagion of like these sort of shocks of liquidity spiral down. so that like, multiple domino effects on the smaller firms leading to the bigger firms type of the things. So I think overall, I think it's a positive and good move.
So let's hope it could really cushion the shock. Now, turning to the real economy, Professor Shin, Korea imports roughly 70% of its crude oil from the Middle East, and concerns are growing about disruptions around the Strait of Hormuz. How vulnerable is the Korean economy to an energy supply shock from the region?
Well, that depends upon how long the war extends. And we have witnessed, the crude oil price rose over $100 couple of days, but now it dropped to to $80. And there are two problems. One is the availability of crude oil, and the other one is the price. And availability, that depends upon how long the war would last. But we have, I think, several month reserves. So as long as the war ends within a couple of months, I think the availability is not a serious problem. And real problem is the price, but fortunately the price went down from over $100 to $80. And if the war ends within a few weeks from now, I think even the price will die down. So much, I think the Korean reaction to the Iran war, I think is overreaction. I mean, over anxious. I think we have to be calm down, and as long as the war ends, within a few weeks, I think everything will return to normal. So I'm not that much over anxious about the crisis happening around the Middle East.
Right. So really everything depends on how long the situation would last. But even though the oil prices have plunged down a little bit, some are still concerned about the impact on inflation and the economic growth in Korea. Professor Kim, what are your thoughts on this?
Yeah, so I think the situation itself has some concerning parts. I also agree with the Professor Shin's argument that we don't have to overreact, but still, there's always 5%, 10% chance that war actually can be lingering and just, longer, as we saw from the Russian and Ukrainian cases. So I think that's kind of probably the worry that people or investors are actually, placing some weights on. So, I mean, the issue, I think, is, of course, if it gets longer, as actually, just mentioned, then in that case, the producer price is going to increase, and also the cost of production definitely is going to increase. And now I think that Korea has finally sort of like almost escaped from somewhat like, the stagnant growth mode. And also the stock market is now, I think, they're revving up and maybe a bit too, fast, but I think at least I think it's good sign. So everything seems to be now in more normal phase. And now I think this kind of blow, if it's, that lingers on, then I think it can actually really cool down this optimistic mode. So I think that's probably the concern. So I think the higher oil price typically act as some form of like a short-term tax on everything from manufacturing to logistics in case of Korea, because Korea obviously is importing, almost all of these kind of things. So eventually these type of the costs can be passed down to consumers. And also I think this type of the price gouging and also the guessing sort of like the acts of like buying up the oils and also trying to increase the price, that kind of like, the speculative behavior always also kicks in. So I think the government seems to address that kind of thing. So let's see what happens. But the growth wise, there's some, available studies about like, I would look at some of the Korean researchers that definitely the oil price increase have somewhat longer term effects on the lower economic growth. So clearly, I think that's kind of the part that are all like priced now, and then also people are concerned about this. So I guess overall, I can understand the sentiment clearly. And also, I think it's somewhat supported by the existing studies that it clearly has negative impact on economic growth. I mean, it's a no secret.
And also, to address these kinds of concerns that are mounting, the government is right now it's considering introducing a price cap on petroleum products. Professor Shin, how unusual or effective is this type of policy during this times of energy crisis?
Well, how unusual. We never had the price cap in any kind of product, since 2019, it's more than 25 years, I think. There has never been a price cap, in Korea. So I think it's a very strange action on the part of the government. And it is just 1 week, almost 10 days. So I went to a gas station today, and the price was surprisingly the same about 10 days ago. So I think the media kind of, reaction to Iran war is a little overblown because there are many gas stations in Korea. The price is almost the same as before a couple of weeks ago. So if, the war ends within, I think, 10 days, which is pretty possible considering the United States situation, I think we are too much overreacted to, something happened in Middle East, and it's going to have a significant effect upon real economy because many people are so afraid about, what's happening in Iran. So I think we have to be a little calm down and see if, what's happening in the Middle East and what happens to the decision of the President Trump. So I think a little nervous, about the people's reaction.
Right, so we shouldn't really be too much overreacting and look into what the developments are in the coming days. Now, when we shift a little bit to trade and investment policy, Korea's National Assembly has passed the U.S.-Korea Strategic Investment Special Act, which supports about $350 billion in investment to the U.S. Professor Kim, what does the scale of this overseas investment mean for Korea?
I mean, it's a humongous deal. So I think it's essentially Korea building a giant state-backed outward investment fund, similar to in spirit to, I think, a sovereign wealth or strategic fund, but rather focusing completely on the U.S. real economy. And I think it's not, of course, just as Korea's situation, but many other countries as well. But given the size of the country, I think, relatively speaking, this is a huge the investment fund that Korea has to put up with. So the plan, of course, is to deploy up to $20 billion a year over roughly a decade. So I think, and plus some other deals for the shipbuilding, $150 billion, if I remember correctly. Then, if executed well, I think clearly Korea is going to be swapping tariff relief and geopolitical stability for long-term equity stakes. And it's going to depend on, of course, how things will change, but in terms of the details. But I think at least, like with other risky investment, I think if it's done well, then it's basically like, to me, Korea is like a small scale, not small scale, but I think it's like some private equity fund for the U.S. equity stakes in some sense. Hopefully, I think Korea can actually get or enough like a recoup of these kind of things, although it's probably not that easy given this political, the situation all tangled up. But I think financially, I think it's going to have, in the short term, definitely have negative impacts toward the foreign exchange reserves. And I think that's somewhat priced already in our current exchange rate, actually. And over the longer term, it's going to entirely depend on the performance. I think it's a bit early to talk about it.
Mm-hmm. Now, we are aware that the investment, much of it is expected to focus on strategic sectors like shipbuilding and semiconductors. Professor Shin, how could this reshape Korea's industrial strategy and its economic partnership with the U.S., considering, it's a very big portion of the trade deal as well?
Well, Korean government had committed about $20 billion a year, and we have to remember that annually Korean current account surplus is more than $100 billion. So the $20 billion annual commitment to the investment project is not significant. It's too significant. I think Korea could manage that amount, $20 billion a year, as long as we continue $100 billion current account surplus. So that's not the problem. Real problem is how fruitful, America and Korean government engaged in profitable projects. We don't know what kind of, projects the Korean government and the United States is thinking about. We know something about the Japanese commitment. So the real problem is not exchange rate. It's not the money, $20 billion a year for 10 years. It is the productivity and the industrial kind of, effectiveness of the project. So I think considering the Trump administration's political popularity, especially after the midterm in November, I think everything could change if the Trump could not succeed in winning the congressional election in November. So everything is very shaky at the moment, until the November midterm election. That's my perception.
So a lot of things that are still undecided. We'll have to see how it will go, be it politics or economy or the situation in the Middle East as well. So as for now, we will have to conclude our discussion right here. Thank you so much for your insights tonight, Professor Shin.
Thank you.
And Professor Kim, we also really appreciate it.
Thank you.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.